What's up, guys? It's Brendan from Market Makers. Happy Sunday, everybody. I have a Pro Trades video, in-depth coverage of the NDX and SPX coming out after this. So be sure to check that out if you want my commentary on the markets and what I expect to happen, because it will affect crypto as well. Guys, yesterday I released a bonus video. It's called Bonus TA. It's from one of my partners in the room. He's a professional pattern trader, the best professional pattern trader I know. His success allowed him to retire in his 30s. Took me till I was 42 to retire. But guys, if you like this type of stuff, that's advanced level TA. That's the education that we give in our room. And we do frequent updates on trades, on video series, on video TA, charts, everything in the room, guys. So we're really focused on education because there's no magic method in the market to make money. If you don't apply yourself, you're never going to be successful in this marketplace, okay? And that's any marketplace. The tools and techniques we teach are applicable in every single marketplace because I trade just about every single marketplace. Guys, if you like that, follow the steps in the video description to our Discord, and we'll see you in the room. Let's jump into Bitcoin, guys. I hope everybody's having a fantastic weekend. It is freezing in Florida. It was 24 degrees at one point last night, so it is cold. But today it's beautiful and sunny, and I'm inside making videos. Bitcoin on the weekly, guys. This is our zoomed out Wyckoff. This is inside Darvas boxes. We have a new candle now. As you can see, it's in the upper area of our trading range. So, nothing exciting on the weekly as of yet. Let's go ahead and fast forward this. Let's look at the Navarro pattern, guys. So, a couple of things. This is just part of the TA space in YouTube. I see comments that say, you never show downside. I see comments that say, I never talk about the upside. As a trader, I'm looking at both sides, guys. It's very important to always look at both sides, okay? Whether you hold spot, whether you're talking about stocks, you need to understand the targets and the support and resistances on the upside and downside. Unfortunately, time constraints with YouTube here to get you guys to watch a video. Can't make hour-long videos every day because nobody's going to watch it. So let's look at this and see what our key support and resistances are and if they have changed at all. Taking my trend-based fib extension, going to look at the upside first. We'll go from the market low to the market high, down to our current low, okay, which we are still holding our current low. Again, this gives us our upside resistances of 48K, 53K, 57.8, and the one fib at 73,263. My last video I did, we spent a lot of time talking about confluences for the 73,263. If the market does turn bullish, I expect that target to potentially be reached if we can flip all of these key resistance levels, especially the 618. We flip the 618, we'll have a bias to go on to the one fib at 73,263, which would be a new all-time high. And this will not happen without the other markets recovering. So watch that other video I'm going to put out there. All right, guys, and let's look at the downside projections as well. So we're going to do this fashion here. We're going to take the all-time high, go to our selling climax candle, go to our up thrust, okay? And you always look for confluence with your fibs. As you can see, this 618, a lot of confluence here at this level. We are holding 34,914. That's your base, guys. If you lose that base, we talked about this on this channel already, but you are going to 24,288. And a couple interesting things to note. That 24,288, keep in mind, this is a wave projection, okay? So that's where the one fib is of 100% retracement from the all-time high down here is at 24,288. But that is in a very, very low level. When you look at your previous market lows here, 28,797 here on BITGET at the B point. And then over here, I guess you could say, would be 27,924. So just to take a trend line, guys, take a ray, you can see what we're talking about here, okay? So that 618, that 618 is lower than the previous two market lows, which, what's my confidence level being able to rebound from that? I mean, it would be an ultimate shakeout if we did fall to 24,288 and we're able to bounce back up. It would be an ultimate shakeout. But to give you an idea, that's your support structure from your previous lows. So you'd be breaking your support structure. So there is no guarantee if you lose that 618, which is why I keep telling you this is crucial to hold this 618, okay? Because on a wave projection, you don't see these numbers. You don't see 28 in here, 29K in here at all. I know it's a common number everybody's talking about, and it's a valid number. It's based on this previous support structure. But in a wave move of an ABC type correction here, and a wave down, you're not seeing that number represented, okay? So you could just come down here, bounce up and come up, or you could go right through it to the 1 fib, bounce, come up. But if you lose the 1 fib, your projection down again is really low, guys. It's 7K, right? That's below the pattern even, is 7K. Just something to keep in mind. This pattern does go out to a 113 extension, and so that's still well within the range of this pattern, okay? But it is something to keep in mind because there is no golden answer for where price could fall. The whole market is supply and demand, and if there's too much supply and not enough demand, you're going down. So best to not test any of this below the 618 and hold 34,914, and then we don't need to worry about this for the time being. And prices, prices accumulating here on the weekly time frame. It's not a very fun time frame to track anything on. It takes so long to see any activity. Looking on the daily, guys, we're just going to click through all the time frames here. Looking on the daily, just a couple basic TA things here. We're going to spend a lot more time here on the 4-hour time frame. That's where I like to trade, but let's look at the daily, see if we see anything. I mean, the overall trend is still up. You see this? If you throw like a 45 angle down here, price angles, you can see your trend is still up. Now, could you be forming some type of bear flag or bearish shape? Yeah, you could be. You could be doing a lot of things, right? Because price is just consolidating. But what it is doing, which you can see a lot better on a 4-hour time frame, you can see that it is moving up and flipping moving averages, okay? But yes, it's moving up. It's moving up very slowly. It's moving up and maybe potentially a ascending channel type formation. Lots of different things it could be doing, but we need to look at this in smaller time frames, get some trading ideas. So here's a 4-hour time frame. In the Wyckoff method, you're doing something very clear, okay? You have your selling climax candle. You have your ceiling established. You exit a trading range. You formed another trading range up here with your last point of support, and you're consolidating in this trading range, okay? But the beauty of understanding how different successful traders trade, this is other things too. This is a lot of different things. If we just take a curve line here, do something like this, just the basic concept of understanding this is accumulation. You could have a very jagged cup and handle type pattern. With the benefit of Fibonacci, look at your 0.5 fib. I want to just show you guys a little trading hack here. Your 0.5 fibs at 38,330. Look at the rejections. 1, 2, 3, maybe 4, maybe a 5th candle in there. At least 4 times you tried to get above the 0.5, which is also at the 89 on the EMA. You see that? So about 4 times now you try to get above it and you get supply dumped on you. So this is clearly some type of ceiling, right? Well, if you understand how Jesse Livermore traded with pivot points, and how Mark Minaveri traded as well with volatility compression patterns, you can do something like this, okay? We can start looking at these waves here that price is forming as it gets up to that 0.5 area. If we see compression in these waves, we don't have a second wave yet. You usually get 2 to 4 waves. As we keep retesting this same area, if the lows keep getting higher, this is a very bullish thing. I don't know if that makes sense. Let me go ahead and draw it for you. So let's say it does something like this. You see this price difference here, minus 8.67%. This would be minus 6.24%. Typically, you want to see 30 to 50% reduction in each wave. If this forms, that's if this candle comes down to this level, right? And then maybe you get a third wave, you come back up. So let me draw this for you. It might make more sense as well. Where is my brush? Ah, there it is. So if price came down here, bounced up from here, comes back up again, hits the 0.5, bounces down, does a shallow retracement, comes back up again, that might be your pivot out, okay? So you could do something like that, volatility compression pattern, and it's just something that price will do after it forms these cup type patterns. Minavarini, God, very difficult name to say for me, he's an Italian guy. Minavarini discovered this pattern, but it's how Jesse Livermore traded, essentially, trading on a pullback, see? So you have this type of thing happening. That's what you're basically looking for. It doesn't have to do that. It's just something worth noting. This could come up from here and punch through. This could come down from here and just fall through, okay? Just again, you got to look at the probabilities up and down of what's happening. So we don't have a second wave yet unless this is the reversal right here, and this would be a very, very shallow wave if it is, and then the next wave could be a punch through, okay? So if this ends up being a reversal, which is too early to tell, you're going from 8.67 to 3.55. This is price compression. You'd see this in your volatility as well. And volatility is dropping, okay? So when volatility drops, I trade with volatility. Coming from Forex, I think it's one of the key advantages of being a Forex trader is volume and sucks. They don't, most exchanges don't really use volume. They use tick volume. Some exchanges report on their own volume for that asset. Other ones pay for services. People say tick volume is just as good as 70, 80% correlation. Well, to me, that's a 20 or 30% handicap. That's not just as good. So a lot of Forex traders trade with volatility. It's very important to understand price moves in waves. And like a coiled snake, when it hits a certain range and comes down, you can see a nice spike up, okay? So that's trading with volatility, and we're seeing that happen right now. That means the candles are staying closer together. If they spread out, they gap apart, that's when you get high volatility like this. So what I want to see happen here is if these candles keep staying closer together, making shallower waves, the volume should decline left to right. This is something that we want to see as well. And the ATR should be on a dramatic decline. We want volume to do this. We want volume to dry up to almost nothing. Okay, we want bars like this. As low as we can get these bars, because then you get an explosion when that happens, okay? And that explosion, again, it's not a bias. I'm just telling you the way price is forming right now, that explosion is looking to be to the upside based on the pattern that's forming, okay? So you could be printing some bearish patterns as well, but right now, using volatility and using things like the caterpillar, you can see that you're trading above the median line. You can see this in a lot of different indicators, and you can see this bottling up, readying for an explosion. Remember I told you this is like Bollinger Bands. As it gets tighter and constricts, see if you're below the median line, propensity is to fall down, okay? We're above the median line, and we're moving at an upward angle, even though it's kind of wavy. So anything can happen in the marketplace. I think this is going to wait. We have that February 2nd pivot point potential. I really think this is going to end up waiting until around that time, because I feel like this market wants to see what the stocks are going to do, if they're going to rebound or not, if it's going to be a buying fest or if it's more blood on Monday. So Tuesday's February 2nd. So I would think by February 2nd on that pivot point, we could see a pivot, and that pivot could be up or down, but it's worth tracking either way, okay? So got to watch that 0.5 fib, guys. 38,330 is a key level to break out of. If you can flip that, you're flipping the 89. Then you got to deal with the 618. But you get above the 618, good bit of upside left, okay? Because you're going to tackle that 144. Be some nice upside up, and that'll get you above a lot of this lower level resistance. Now, keep in mind, not to sound over bullish, any one of these you can fail, especially the 618, most commonly retraced to fib, and you can go back down. And again, I'd say this all the time, but you will know that you are bearish if you start losing your lows that you already established in this trading range, okay? So if you came up to the 618, fell back down here, and you're testing these lows and you get another candle down, that's extremely bearish, and more than likely you just lost key support and you're falling down to make yet another accumulation box, okay? And this box would then flip to what, guys? Distribution, okay? So that's just something to keep in mind. Let's look at the 4-hour time frame on this chart. Do some different things here. So one thing I like to do, teaching Darvis as well, very successful trader, I like to put these price movements in encapsulation boxes within Wyckoff. So I'll take my selling climax, I'll take my ceiling, my automatic reaction, gives me the first trading range, have a spring down here, you can see that spring right there. We exited our trading range, sprung back up, strong sign of strength, propelled price up, immediately contacted the moving averages, got rejected, and we're forming a new base up here, okay? This is the last point of support. So what I like to do is encapsulate these, again, with Darvis boxes, so I can see what the key resistance levels are potentially for breakouts, okay? So when I look at it, and you look at this with other things, other elements like your moving averages, you can see the range that you're trading in currently is this green box up here, right? So if you stay in this range overall, that will be a bullish thing. If you end up falling out of this range and going back to this range, that could be considered a bearish thing because you're losing momentum of the moving averages that you flipped. And right now, I believe you flipped the 34 and you flipped the 55, I believe. Yeah, no, 55 is on top of you at the moment. You did have it flipped and now it's on top of you. So you're between a 34 and 55. You see that? So if you start flipping moving averages, you got to remember that is a bullish momentum thing, okay? So that's just something to watch. But, you know, not to be a broken record, but a key concept people need to understand in crypto is these markets are all tied together. And if the stock markets get rebought and do well, Bitcoin and crypto may lag behind it or it may lead. That's what we're looking for, is to see, is it going to lead or is it going to lag? Because depending on dumps or pumps in the last 6 months, sometimes Bitcoin's dumped or pumped first, other times the market dumped or pumped first and Bitcoin reacted. So it really just depends. But right now you're just accumulating. You're accumulating in waves. There are patterns forming in these waves. There's lots of different things happening. There's Fibonacci patterns forming as well here. We go over all these in our room for tradable events. We have patterns like that, like a bat, and it's right at the 233. That's the PRZ at the 233. So like I said, the markets are like a rubber band. You lose your moving averages, price will come up to test them, just like it did here, and it either passes them or it gets rejected, and it comes back up, tries again, passes them or gets rejected. At some point, it's going to make a decision that it's going to get a really hard rejection, or it's going to start breaking through these moving averages and using them as support. And at that point, if it does that, then you're looking at an upside, okay? And so we have our upside and downside targets. I think that's about it, guys. That's about all I want to show you. Watch for those other videos coming out. Oh, go ahead and smash the like button for me if you would, please. Subscribe to the channel. I think this video might be a little bit long, but we didn't have a video yesterday for me. So hope you enjoy it, guys. Ask me any questions in the comments. Be happy to answer them. And happy Sunday, everybody. Talk to you guys soon.